Alright, gang. It's your boy Nature, aka Nature. Alright, so gang, let's go back for another video teaching you about how to, there are three types of Forex charts and how to read them. Okay, so we're going to go over the three types of charts and how to read them in Forex. Sometimes it's all about your perspective when understanding a market. Different types of charts can influence how you analyze and assess your currencies. Okay, so there are three types of Forex charts and how to read them. In order to study how price of a currency pair moves, you need some sort of way to look at historical price and a current price behavior. A chart, or a more specifically a price chart, happens to be the first tool that every trader using technical analysts needs to learn. Okay, it's how to read the charts. Okay, so another name for it is called price charts, because it's a bunch of charts with price on it. So a chart is a simple and visual representation of a currency pair price over a set period of time. Okay, so it's a visual representation of a currency pair price over a set period of time. This is what a chart is. Okay, you have an uptrend chart. Now you see uptrends and a downtrend. Y'all know how these are trend lines. Okay, so this is a chart, and it represents a visual representation of a currency pair price over a set period of time. Okay, it's the most easiest way to read charts. Okay, it's just looking at the charts. It visualizes the trading activity that takes place during a single trading period, whether it's in a 10 minute, a 4 hour, a 1 day, or a week. Okay, so it visualizes everything that takes place as far as the trading activity, from the trading period to everything, whether it's in a 10 minute, a 4 hour, a 1 day, a 1 minute, a 1 week. Any financial assets with price data over a period of time can be used to form a chart for analysts. Okay, so all this as far as price data and the period of time is all in the charts. You can use it. Price changes are a series of most random events. So our jobs as traders is to manage risk and to assess probability, and that's where charting can help. Okay, so charts are user friendly, since it's pretty easy to understand how price movements are presented over time, since it's so visual. With a chart, it is easy to identify and analyze a currency pair, movement, patterns, and tendencies. Okay, on the chart, the y-axis, which is the vertical axis, represents the price scale, and the x-axis, which is the horizontal axis, represents the time scale. Okay, price are plotted from left to right on the x-axis, representing the time scale, and the y-axis represents the price scale. Okay, so the most recent price is plotted further to the right. Okay, so the further to the right is the most recent price, what price is going on. This is the furthest one to the right. So back in the day, they used to have to draw charts with their hands. Luckily, Bill Gates, Steve Jobs, they invented the computers. What does price chart represent? So a price chart depicts changes and supplies and demands. So a chart aggregates every buy and sell transaction of that financial instrument or that currency pair. Okay, so it aggregates every buy and sell transaction and records everything of that current or that currency pair at that given moment. A chart incorporates all known news as well as traders' current expectations, and the future news is all in the chart. So when the future arrives in these realities is different from these expectations, price shifts again. So, when the future changes and, a new reality and a new expectation begins, that's when price starts to shift again. The future news is now known as news, and with these news information, traders adjust their expectations on future news, and the cycle repeats. Okay, so it's why every day the cycle repeats. So just like in TradingView, you look at the news and you see all the new information that traders have put out there that they're adjusting, and you adjust to their news. Okay, and you just keep on repeating that cycle. So TradingView, shout out to TradingView. Charts bend all activity from millions of market participants. Okay, so it shows all the activity over millions of market participants, not just us. Okay, whether they're human or or not, whether the transactions occur by the action of an exporter, a currency intervention from a central bank, or trades made by AI from hedge funds, or discretionary trade from retail traders. A chart blends all these informations together in a visual formation technical traders can study and analyze. So, okay, the types of price charts. Let's take a look at the three most popular types of price charts. We have the line chart, the bar chart, and the candle chart. Now we understand. Now that you understand forex charts, let's let you know what you should do about each of them. Okay, we use the candlestick charts; they're the most easiest charts to use, but we're going to go over line charts and bar charts too real fast so you understand what they are. The line chart is a simple line chart. Draws a line from one closing price to the next closing price. Okay, it's a simple line chart that draws from one closing price to the next closing price. This is what it looks like when strung together. The price makes is going to zigzag, and you see how it's zigzagging up and down. When strung together with a line, we can see that the general price momentum of a currency pair, strung together with a line, the moving average and stuff, we can see the general price of a movement of a currency pair over a period of time. A simple way to follow this is the line chart may not provide. It's simple to follow, but the line chart may not provide the trader with much detail about the price behavior within the period. All you know is that price closes at the X and ends the period. You have no clue what else happens, but it does help the trader see the trend more easily and visually comparing the closing price from one period to the next. This type of chart is usually used to get a big picture view of price movements. The line chart also shows trends. The best, which is simply the slope of the line. Some traders consider the closing levels to be more important than the opening high or low by paying attention to only the close price fluctuates within a trading session are ignored. Here are examples of a line chart. This is what a line chart looks like. Okay, it's a line chart right here. All right, and you see how you can tell the overall trend. It's an uptrend. You can tell from the line charts too. Um, so they don't really have much data as the candlesticks charts, or the bar charts, but line charts, are one of the three types of charts you can use. The next chart that you can use is a bar chart. Okay, so a bar chart, unfortunately, is not a chart, a bar, but a bar chart is a little more complex. It shows the opening, the closing price, as well as the highs and the low. Bar charts help a trader see the price range of each period. Bars may increase or decrease in size from one bar to the next or over a range of bars. So this is what a bar chart looks like. The bottom of the vertical bar indicates the lowest of the trade price for that time period, while the top of the bar indicates the highest trade price paid at that time period. So the high is the low. You have the opening and the closing, just like in the candlesticks. Okay. So the vertical bar itself indicates the currency pair trading range as a whole. It could be like the body. As the price fluctuates becomes increasingly volatile, the bar becomes longer. As the price fluctuates becomes quieter, the bar becomes smaller, just like in candlesticks. So the fluctuation of a bar size is basically how you read it because of the way each bar is constructed. The vertical height of the bar reflects the range between the high and the low price of the bar period. The price bar charts also record the period opening and closing price with attached horizontal lines. The horizontal hash on the left side bar is the opening price, and the horizontal hash on the right side of the closing price is the closing price. Okay, so the opening is on the left, and the right side is the closing price as far as the bar chart is concerned. See, opening on the left, right side is closing. So this is what a picture looks like of a bar chart. See the bar chart right here. This is what it looks like. The range of the momentum of the bar chart depends on how long the bar chart is. You got the opening, you got the close, you got the high and the low. So this is with a bar chart. The easiest chart to use, however, is the Japanese candlestick charts. So that's all we're going to use is the Japanese candlestick chart. But it's good to know that information. Information is everything. So take notes. Throughout our lesson, you will see the word bar in reference to a single piece of data on the chart. A bar is simply one sentiment of time, whether it's in a 1 day, 1 week, or 1 hour. When you see the word bar going forward, be sure to understand what time frame is referring. Bar charts are also called OHLC charts because they indicate the opening, the high, the low, and the close for a particular currency pair. A big difference between a line chart and a OHLC chart, or open, high, low, close chart, or bar chart. The difference between a line and bar chart is that the OHLC or bar chart can show volatility more than the line chart. So here's an example of a price bar again. The opening is a little horizontal line on the left of the opening price. The close is the horizontal line on the right of the closing price. Then you have the high at the top of the vertical line, represents the highest price time period that price went to, and the low is the bottom of the vertical line, defines the lowest price of the time period that price went to. So I hope this helps. Candlestick charts. The candlestick charts is a variety of the bar chart. The candlestick chart shows the same price information as a bar chart, but it's prettier. The graphics, is way better. So many traders like this chart because they're not only is it prettier, but it's easier to read. So candlestick bars still indicate the high, the low, the opening, and the close, with a vertical line. However, a candlestick chart has a larger block or a larger body, and in the middle, and indicates the range between the opening and close price. Candlesticks help you visualize bullish and bearish sentiments by displaying bodies using different colors. Traditionally, if the block is middle or filled in or colored in, then the currency pair is closed lower than its opening. It's in a downtrend if it's filled. In the final example, the filled color is black for our filled block. The top of the block is in the opening price, and the bottom of the block is in the closing price. The top of the block is in the opening price if it's filled, and it's the opening price, and the bottom of the block is the closing price if it's filled. Same thing with the white candlestick. The closing price, the top of the block is the closing price, and the lower part of the box is and the bottom of the block or body is the opening price. If it's white, the highs and the lows will still be the same. Just the opening and the closings is different. Okay. For if it's black or red, then the opening price will be at the top of the block, and the closing price will be at the bottom of the block. And if it was white or green, the opening block will be at the bottom, and the closing body or the block will be at the top. So if the closing price is higher than the opening price, then the block is middle will be white or hollow or unfilled or green. So the black and white candlesticks, they just look so unappealing. And since we spend so much time looking at a chart, we'll feel easier to look at a chart that's colored. So a colored television is way much better than a black and white television. So we put some splash on the colors on these candlestick charts. We simply substitute green instead of white and red instead of black. This means that if the price closes higher than its opening, then the candlestick will be green. If the price closes lower than its opening, the candlestick will be red. In our later lessons, you will learn how using green and red candlesticks and how it allows you to see things in the charts much faster, such as uptrends, downtrends, and possible reversal points. For now, just remember that Forex charts, we use red and green candlesticks instead of black and white. So that's why we've been using random candlesticks lately, and we'll be using these colors from now on. So green and red candlesticks. If it's a red candlestick, the opening's at the top. It's going to open at the top because it's selling at the top and going to close at the bottom near the support. Same thing with the green candlestick. It's going to open at the bottom and it's going to close at the top near the resistance. Okay, so here is an example of a candlestick chart for Euro USD. Okay, this is what a candlestick chart looks like. The green means it's going up, and red means it's going down. Okay, green means it's going up, and red means it's going down. Alright, so this is what a candlestick chart looks like. These are the three different types of charts that you can use in Forex. So the purpose of candlestick charting is strictly to serve as a visual aid, since the exact information of a pill on the OHLC bar chart has the same exact information. But the advantages of a candlestick charting is candlesticks are easy to interpret it and are a good place for beginners to start figuring out chart analysts. Candlesticks are easy to use. Your eyes adapt almost immediately to the information in the bar notation. Plus, researchers show that visuals help with studying, so it might help with trading as well. So, candlesticks are very easy to interpret it, and a good place for beginners to start figuring out chart analysts. Candlesticks and candlestick patterns have a cool name such as shooting star, which helps you remember the patterns, means. So candlesticks even have, great names like hammer, shooting stars. So candlesticks are good to identify the market turning points, trend reversal from an uptrend to a downtrend to an uptrend, and you will learn about this later. So there are many different types of charts available, and the ones that are not necessarily better than the other. But the data may be the same. So the data is presented, by charts. So each chart will have its own advantages and disadvantages. You can choose any type of use multiple types of charts for technical analysts. It all depends on your personal preference. Okay, so this is all technical analysts just looking at the charts. Now that you know why candlesticks are so cool, it's time to let you know that we are using candlestick forex charts for most. Most traders use candlestick forex charts. Okay, candlestick forex charts. So forex candlestick charts are the best ones to use. Alright, so putting together there are different types of price charts that traders can use to monitor the FX, the forex market. Keep things simple as you begin reading price charts. As you find your chart preferences, look for proper balance of having enough information on the chart to make good trading decisions, but not so much information that your brain is paralyzed and you can't make any decision. Finding the right combination is different from every trader. You want to use Fibonacci, everything. So it's important to start with the basics before you start working on your way into using technical indicators like Fibonacci, moving average, which we will cover later. We already went over, but these are the three types of charts that you can use. Okay, line chart, bar chart, and candlestick chart. So it's your boy Nature, aka Nature. Alright, gang. Three types of forex charts, and how to read them.